My name is Shane Handy. I am the founder of The Rational Trader. This is a 5-part video series on trading the markets using visual order flow. Visual order flow is a way to graphically display the order flow data so that we spend less of our time picking apart the data and more time applying it to what the market is doing. Our agenda is the first video, part 1, is Introduction to Wave Volume. This is a technique we use to help us choose direction. Part 2 is an introduction to order flow. This is basic concepts and a way to graphically display it so that it is easier to see what is happening. Part 3, there's a lot of ways to enter the market. We're going to look at one in particular, which is understanding breakouts. So when the market moves to a level, looking at the order flow to help us make a decision on whether we think that breakout's going to succeed or not. Part 4 is an advanced order flow view, looking at the data in a little bit different way and then displaying it differently to help us understand where is the momentum in the market. And then part 5 is bringing it all together, how I read the market using visual order flow. Now, before we get started, we need to talk about risk. So trading is risky, and you can lose all of your money. And with futures, because of the leverage, you can actually lose more than your initial investment. There's some other elements listed on screen here that are important, and I'm going to come back to them in a moment. But first, I want to talk about the nature of risk or the source of that risk. And I think this is something that people misunderstand, and as a result are focusing in the wrong area as they work to manage their risk. The first component of risk, the first source of risk, is the market itself. I call this the technical risk. The market, we are trying to predict the future. That is inherently risky, and as a result, we need to deal with that. This is what most people think about when they talk about the risk in the market. Dealing with the unpredictability, the probabilistic nature of trading. The problem is this is not the only source of risk, and in fact, I don't even think it's the most important component. More important is the physiological risk, or the biological component of risk. And what I'm referring to here is that when you put money at risk, your body responds to that threat in the same way it responds to every other threat. It initiates a physiological response that causes fear, anxiety, doubt, and the flip side of these, excitement, greed, and euphoria when things are going your way. This physiological response impacts your ability to make sound decisions and has to be dealt with. All right. The Rational Trader was designed to recognize that this is the largest component of risk that you need to deal with, and creates a program that is intended to help you overcome it. That's what the Rational Trader does. Now, let's go back and look at suitability, performance, and hypothetical results. Suitability is talking about do not trade with money you can't afford to lose, because you are likely to lose it until you learn how to trade. Okay? You need to start small. The other component here is that you may discover that you don't have, because of that physiological response, your trading is not for you. And if that's the case, the sooner you know that, the better. The next is performance. Two people can use the same method, the same technical method, and have vastly different results. And the reason is their physiological responses and how they deal with them as they trade. This is why person A can be successful and person B will fail, even though they're using the same thing. Okay. Hypothetical results are simulations. These do not have any element of the physiological risk at all, and are therefore useless. Just ignore them. Okay. With this in mind now, let's get started. And this is part 5 of our video series on trading the markets using visual order flow. We're going to put together everything we've built in the previous 4 videos and read the market using visual order flow. So if you haven't watched those videos, you need to stop and go watch them all. This will not make any sense without that information. So let's get started. This is the chart and the day we've been working with. This is the NASDAQ. on 8/8/2017. And we have all of our pieces here. We've got the wave volume and then the custom study that's helping us see the specific patterns. So the no interest short and the divergence short, divergence long, no interest long. We have the zigzag to help us identify the levels. Okay, so there's a level here, here, here. And we have the order flow strength indicator. So the coloring the bars pink and blue. Pink for aggressive selling and blue for aggressive buying. And then we have the momentum, the order flow based momentum indicator, which is giving us bright green and bright red outlines for longs and shorts. So what we're going to do now is, starting from the beginning of the day, we're going to read what the order flow is telling us. And from that, we can use that to make decisions about what to do. Now, this is probably a different way of looking at it than you're used to. A lot of trading is really taking math-based indicators and then using them to make a decision about what to do. So, moving average crossovers and oscillators and stochastics and look, I've got an oversold indicator, I need to get long, those kinds of things. And I'm not doing that. What I'm doing is I'm looking at the behavior of the traders who are trading this instrument. And it actually doesn't matter what the instrument is. I'm not trading the NASDAQ. I'm trading the other traders. And what I want to do here is I want to be able to look at the market and tell a story about what's happening. Who's getting long, who's getting short, how they're reacting to what's happening in the market. And that's what we're going to do here. This is what I do every day, personally and in the trading room. And so let's get started. The first thing we have to do, though, is I need to turn on one other indicator that'll make things a little bit easier for us. Give me just a moment. All right, so what we have here is I turned on the blackout study I have that will highlight areas where I either either stand aside or I'm extra careful because of things that are happening at that time. So here you can see the first 5 minutes. There's this gray background here is a blackout period. I won't take trades in the first 5 minutes. Things are a little too unpredictable during that time. And you can also see over here at 7 o'clock, there's often news at 7 o'clock. So I just have the software draw that background for me to remind me to be careful. I don't believe there was news on this particular day. But nevertheless, we still see extra volatility at 7 o'clock Pacific. So after 30 minutes of trading, I believe there's a new group of traders that come online, and we see some volatility in that period. So I tend to be extra careful during that time. All right, so what do we see here when we open up? We see momentum long. So there's net aggressive buying going on in the market. This is what I'm looking right here. This is what we're seeing. I'm just waiting for the 5-minute blackout to clear, and while that's happening, we set two wave volume short signals, divergence short and no interest short. They're both looking at this case here, where this current up wave here has less volume than the previous one, and so because you're also setting a new high while you're doing that, that's divergence. No interest has an extra criteria in that it's looking at this wave and says, look, I see more down volume than the up volume here. So that's a no interest. There's no more interest from the longs. Now, I tend to be very careful about these first sets of signals that show up during this the opening blackout period, because we cross the open boundary, and so the number of traders that are participating has increased dramatically. So I'm extra careful. If there's a marginal signal, I tend to stand aside and just let it play out. In this case, you get a pretty clear short. In reality, I believe the break here happens far too quickly for you to do anything, unless you're doing the aggressive short the bar as soon as it goes pink, all right, which you could be. So something I'm not doing here is going through the process of getting some context for the day. What is the larger picture? I'm not doing that yet. That's out of scope for this discussion. But what we're seeing here is we break that low. There's aggressive selling. There's a variety of entry methods we could use to get in. I'll end up missing it in this case. Let's talk about what happens at the bottom of this wave. This is a little key here. All right. So the question I have for you is, who's selling here and who's buying? Okay. down at this area here. So the people that are selling are, to me, it's fairly obvious. They're newer traders that are chasing the market. All right, they're likely in for some pain. All right, chasing is usually bad. But who's buying? And you see this everywhere, actually. Every wave ends this way, where the market makes a move, and then what is going on here that's stopping the market from going down? Okay, the answer, of course, is buying, but who's buying? And the way I interpret this is that the people who got short here are now buying here to take profit. Okay, those people are buying. And that's what initially stops the move. And I believe that's true for just about every wave. All right, there's a move, the people that got in start to take profit, and that's what initially stops it. That's what stops it down here. You do have some people who are generally larger traders who are starting to build positions at key levels. That's harder to see, so I tend to just ignore it in terms of my analysis. The other people that are buying here, particularly in sort of this area, are those that chase the market down. So you've got buying here that's profit taking, and then you've got the people that chased. If you think about it, the people that bought the lows, right about in here, they're starting to bail out. All right, so you've also got people getting stopped out. But in both cases, these are people that are not entering the market to the long side. They're exiting. So the people that are taking profit are buying to close, and the people that are getting stopped out are, it's buying pressure, but they're getting out of the market. They're not buying, and now there's a contract in the market, and it's pressure to go up. And so what happens is we don't know if the market's going to turn yet. We have to see what happens next. Okay, so once the profit taking ends, once the stops for the foolish chasers end, now we find out, is there more buying interest to take the market higher, or are we going to continue to see more selling? And the answer is pretty clear here. All right, there's enough buying that you actually change the momentum to long, but you immediately close down. Okay, this is called stopped momentum. So particularly when this bar is by itself like this, so you were neutral, you transition to momentum long, you immediately close down. The people that may have been buying to get long here, thinking they missed the turn, or they're about to be in some pain, because we don't know yet that we have more buying interest to the long side yet. All right, given the fact that we broke through, this is a very obvious place for the smarter people to short it. Okay, so rather than blindly short the lows, wait for the pullback and get in here. And that's how I read this here, particularly given that that's right at the Globex low, that overnight low. A lot of eyes are looking at that level. That's why that line is drawn there. Okay, so this, to me, what I see here is people are shorting that pullback after the break, right at the Globex low. There's aggressive selling in that bar and stop momentum, a very clear short to me. Okay, so what happens? For me, my entry would be right there. Sometimes I'll be more conservative and go one tick in front of that Globex low. You'll often miss it on a pullback like that. But in this particular case, actually something fairly interesting happens, because the market trades lower, but then it doesn't go down and test this low, and it should. If the market's going lower, we should pull back like that and then crack that low, and we don't. In fact, you see new buying interest. All right, this is bad news for the shorts. All right, because we transitioned. All right, so think about it for a moment. We broke lower. There's clearly selling interest. And when you think about it, not only do we see aggressive selling, but price is moving lower, so they're lined up. All right, we pull back, a very normal looking entry short, and you go neutral. Okay, this is fine. You expect that. The next thing to happen is we should go momentum short and take out that low, and we don't. Okay, so that bar there says the shorts are in trouble. That's the way I read that. Okay, As it happens, it rolls back over, and then you get this momentum short here. That's a reasonable add to me to your position. It's a little dangerous because you're right at the lows, and the lows and highs are obvious points of rejection. We'll talk about that a little bit later when we look at the long side. So I could see you adding to your position there, and then you'll end up scratching because you've got profit in your first part, and the entry here is going to get whacked as the market pulls back. All right. So we tag this low here. We don't see any aggressive selling, so we don't have a strength indicator to get in on that break. And in fact, you bounce up and you set divergence long, and this is really a big problem now for the shorts. Okay, a bread and butter trade setup for me, once I get divergence, is if the market trades back into this level and then closes up, that's an entry for me. So divergence, advance, complete the wave right there, pull back. That up bar is an entry long for me. So I'll bid back one tick off that bar, or sometimes depending on where it is, I'll get my stop just below the low. So it would be right there. It's a one tick difference. Both will get filled in this case. And then we now wait. Okay, so the market goes neutral here. All right. This is really key now, because what we see next in the momentum is going to tell us what the direction is. It's not unusual for the market to fall and then consolidate and then continue the fall. That's not unusual. That happens a lot. When it's really strong, it pulls back like it does here and then just cranks lower. All right, which is why we're interested in getting in on that. It didn't work out that way today. Now that we've set we tagged this low, we tagged it again and didn't break through, and then we went neutral. Now we're just waiting. Show me some indication in the order flow that the buyers are stepping in or the sellers are stepping in, and we actually get it all on the same bar right here at the break, no less. Very strong signal to get in. You've got no interest long now, so the wave volume says get long. You're breaking through that level on big buying and a rotation to momentum long. Okay, this is very clear to me to get in right here. All right, in fact, if I'm already in down here off the divergence, this is an add. Okay, the divergence signal, I'm going to be looking for 2450, which is just above the open. So I may alter that and pull that target just below there. This is another obvious place of rejection. So a lot of eyes are looking at the opening price level. The vacuum entry here on the breakthrough, and then of course you see, because the market's moving strongly now in this direction, you continue to see momentum long. Okay, and it finally starts to falter here. Okay. Now, what's next? It's the same thing. Who's selling up here? Who's selling up here? All through here and here. The people that got long are now selling. That's what stops the initial move. Okay, so the people that chased it up start to get stopped out. This is what this little wave is right here now. Okay. We actually have there's an interesting number of them, all right? Here and here you see rotations to short with bars closing down, all right? So, this is breaking the high at the time, all right? And so you had people that were interested in if they were long, they were getting out protectively. Others that are trying to pick the top are shorting it. But you can see not a whole lot happens. Our wave volume still says long. In terms of a pullback, what I want to see is I want to see this deeper and then a rotation to momentum long. That's what I want to see. And it doesn't give that to me. So the way I read this is I'm expecting the longs to be selling to close. I'm expecting the people that chased it up to be getting stopped out here. And I'm waiting for that shakeout to finish. And generally speaking, that's about 40 to 50% of the move is what happens. This is where those Fibonacci numbers are coming from. All right, generally speaking, it's about, what is it, 38% or something is the first fib level. That's what's going on here, is that, the people that are in the market are getting out, people that chased it are getting stopped out, people that are trying to pick the top are getting in. Once all those people are done, then we see what happens, all right? And so since we've got a trend long, I've got wave volume long, I'm looking for that rotation, and that rotation looks like this. You pull back, you'll gain momentum short, and then you'll rotate to long. My problem here is that it wasn't deep enough. All right, and in fact, that Globex low level looks perfect for the place that it should pull back to, since there's going to be a lot of eyes looking at that. So I'm not doing anything here. I'm still waiting for something a little bit easier to understand what's happening. Again, I'm expecting now the same thing we saw before, where the market, it made a move and then it went sideways, and now it's made a move and it's going to go sideways. So what's happening here is the closing out of the longs and the people picking the top, all that's taking a little bit longer to resolve itself. And now let's just wait and see what we get. Okay, and so I'm just waiting now for another wave volume signal to give me a direction. My long from here is going to end up getting filled, up here somewhere. Whoops, that's the wrong button. Up here, that's the 10 points. I may have gotten out sooner when I saw this happen, okay, because I got really close to my 10 points, and then we didn't quite get there, and you go momentum short. It's reasonable to get protective. Take your profit and then just wait. The rigorous stop trail has you waiting for this wave to complete and then go up, all right? And then you'd move your stop here. So just in general, if you're having trouble staying in the market, the market moves in an ebb and a flow. That's what those waves are, right? And so you have to let this happen. You have to let this piece here, you have to let that pullback happen and then move the stop. Most new traders move their stop far too aggressively. They're generally getting out just as the market is finishing its pullback. They're starting to freak out because we're giving back profit. All right, so you can develop rules that will keep you in the market if you are able to follow them. All right, so what we get is divergence right here. So we nick this high, and in fact we broke this high too. You'll notice there's no aggressive buying here. There's no blue bars here. There's no real strong indication that the market is going to crack, is going to just blow through that. There is a transition to momentum long there. There's not much of a pullback here. I think this is just, the move is just continuing from where it started. The entry for me in this move was down here and here. I'm not going to chase it up here. I want a better signal. I want a better entry. Okay, so we nicked the high. We nicked the high again, and this time we set divergence here, divergence short. So longs at this point are now, you have to be careful, because the opportunity for the market to go higher was right there, and it didn't do it. It failed miserably, in fact, when you look at the difference here. If the market is this strong, then we should be taking out that high with equal strength, and we didn't, all right? At least not yet, right? So what we get is divergence short, which means if I get a move into this zone up here and a down bar, that's a short signal for me, all right? But what happens in the meantime is that we get another long signal instead. Okay, so this is actually a very useful day here, because here we get divergence long, okay, and then we advance and pull back, but there's no short signal there to orient me short again. Instead, the amount of volume in this wave is not enough or rather the amount of volume in the up wave is enough to negate any wave volume no interest signal. So this divergence signal stays in play. Here, that doesn't happen on the long side. We get divergence short here, and I'm waiting for the pullback into this zone, but instead, in the meantime, I get no interest long. Okay, so now I'm looking long. So this changes things dramatically, actually, because I'm looking for a deeper pullback in order to get in, but the market is clearly, it's not going to give it to me. The opportunity was right here. This is the seller's opportunity to get short and take the market lower. We broke the high and didn't go higher. They should be piling in. And you can actually see them try right there. You can see them try. Okay, we broke the high. Didn't go higher. We nicked it. Let's jump in. All right, but there aren't enough of them to overcome the buying that's sort of laying in wait down there. It all gets absorbed. And we see the market advance. So this is a reasonable entry long now. Okay, it's not, I don't like it as much as some of the other entries because it still feels to me like the market made a big move and didn't pull back much. But in terms of the read, it's time to get long. Let's find an entry. Another pullback would be nice. I like to see, sort of a bread and butter, no interest trade setup is when, if you set no interest long here and you do the same thing as we did with that divergence signal, you advance and then you pull back and then you go, I'm looking for bright greens right there, momentum long or big buying, aggressive buying, a blue bar. All right. So in this case, that's sort of happening now, actually, right here. All right, you're pulling back, and now this was the opportunity for the sellers to take the market lower, and they failed. Okay, no interest long, momentum long. You can get in as soon as this bar turns bright green. Actually, it's a riskier trade because you're right at the highs, and this is a place of likely rejection. So just as before, we broke the high here. Nothing much happened, okay? We broke the high here, nothing much happened. Now, it's not surprising necessarily. I don't see in the order flow aggressive buying up here. But nonetheless, the point is if I'm going to get in prior to a break of the high, I need to be pretty aggressive with my stop trail because this could happen, all right? And that might be the top, and you're going to get crushed, okay? So understanding that, if I'm going to get in on this bar, my stop is going to sit right here, just below the low of that bar. And then if the next bar closes up, I'm dragging the stop up behind it as well, because when you pop through that high, it should take off, all right? And so let's see what happens here. Yeah, so if you get in here, then you can move the stop to there. Now, the other option here is the vacuum entry, because you're breaking through the high and you're closing above this level with momentum long. Okay, so it's very reasonable now to use a vacuum entry where you go, this is the signal bar here, all right? And so as the next bar is drawing, I've got an order placed right there. It's not going to get filled. That bar closes up, but the next one's fine. The next one I'm going to get filled right there, okay? Something to notice is that purple line is the previous day's close. It's actually not the previous day's close. It's the last traded price at the close of the previous day's session, which is not necessarily the same as settlement, but that's what that line is. You can see right there, there's some selling up there. So it's the same thing now. People that have gotten long are taking profit right in front of the previous day's close. We also have, you can see up here, the previous day's high, PHOD, and the Globex high, the overnight high. So I have the software drawing these levels for me automatically. And so you can see there's people that are willing to get short up there, or because we're at the end of the market's made a move in this direction, you've got people who have gotten long down here who got good entries and are now taking profit. And this looks like the initial stop of that wave. It makes this entry a little dicier, in fact. This entry feels like I'm chasing, in fact. What happens, though, is very interesting because the market just it rotates to momentum short. So there was enough selling to take us all the way from momentum long through neutral down to momentum short in a single bar, and it immediately gets wiped right there. So that tells me it's pretty strong. All right. So if I didn't get in here, you can consider trying to do something around this area. I would switch over to this chart here, find a high volume node, and park an entry at one tick in front of that is how I would do that if I didn't get filled here on my vacuum entry. Okay, so when I look at this, what I see, I really like the way this bottom sets up for me. We come down, we see the initial buying that stops it. It looks like the sellers are stepping back in. We're going to take that market lower. It doesn't happen here. I'm going to scratch on that trade. Divergence long, a very, very, very clean divergence long entry on this bar. We move back into that zone and close up. And then there's an add right there. No interest long. And then we break on aggressive buying with a rotation to momentum long. Okay, there's a very clean vacuum pop entry there. You can see up here, buyers taking profit. There's no new sellers. We don't really come down much. We go back up and we tag that high. We set divergence short. It's time to look short now. Okay, be very suspicious of that long at this point, but not for long, because no interest long steps in, and this bar is pretty interesting. So what makes this so useful is, you know, as we fall off these highs, you see aggressive selling, you see sellers stepping in, momentum short. It's stopped immediately, all right, and then you go neutral. All right, so let's zoom in on that a moment and take a look at that, and then we'll end today's video. You're at the open, and in fact, you'll notice that you popped back through the open, you pulled back to it, you couldn't go lower. You popped higher, you're kind of stuck now between the highs and the open. You come back down to the open, not able to go lower. All right. So what I am interested in here in describing is the rotation. So we sort of expect the market to bounce here. There's a lot of eyes on the opening price level. It pulls back and it goes neutral. The fact that it goes neutral is really helpful, because now you can go in whatever direction the next momentum signal shows you. All right, I've got divergence short here. I can make a strong case to get short. I pulled back to the open. I've got no interest long now. I can make a case to get long as well. All right, what does the momentum tell me to do? It says to get long. It rotates from neutral to momentum long. And so you can see the buyer stepping in. That's what this tells me. I can see the buyer stepping in. Okay, I need to get long. Okay, I may or may not find an entry, but I can see what's happening. All right, and that's what when I talk about reading the market using visual order flow, this is what I mean. You should be able to, or rather, my goal is to be able to tell what people are doing. I can tell a story about what's happening. Oh yeah, these people here are taking profit, and the people that shorted it down here that are late to the party are getting stopped out, but then the normal step back in after the pullback after the break happens. All right, let's go low. And then we just nick the low though. All right, there's not enough sellers to take us lower. There's not enough interest on the sell side. And so we set divergence. And then here it is again. Here's their attempt to go lower, and they just totally failed. All right, it's time to get long. And then here, that's a little bit of a safer trade in some respects, because now you've got momentum long. We often get this momentum long earlier. I like it better when it's not so close to that break. I'd rather get in before the break and then participate in that pop when you break through. All right, you can see up here, buyers that are taking profits, stopping the initial move, but there aren't enough sellers even to give you a decent pullback. All right, buyers stepping in again. There's a fight going on here. Sellers, we break the high, no momentum long, no aggressive buying, and we set divergence. Not surprising. All right, we just nicked that high. There doesn't appear to be any long interest at the moment. Here's the seller's opportunity to take the market lower, but they fail. They fail to do that, and you very clearly can see it as soon as that bar finishes drawing. No interest long shows up, and now at this point, whatever momentum shows up next it's a reasonable choice that the market's going to go that way. It's possible you're going to continue to thrash sideways. All right, I would tend to think it's going to go higher because this was a really strong move, and we did not get. There were 2 attempts to stop it, and they both failed. All right, let's get long. All right, so that is the end of our series on trading the market using visual order flow. I hope that you found it useful or informative, and if so, then you can check out the website. There's a lot more information there, www.therationaltrader.com. And I thank you for your time and attention. Take care.